Okay, and Jayakumar joins us. Let's connect with him and let's take our conversation forward. Jakes, for a market where bulls were looking immortal, now the bulls are running for cover. At the beginning of the year, the general narrative was that we are in for a good year. Now everyone is guessing what is coming next. What is your view on what lies ahead for us?
I thank you very much and a very happy new year to all your viewers. The way I see this is that complacency had set in a pretty major way, and we saw that the last 6 months gave virtually no returns. Indices did not fall by more than 8-10%, and yet portfolios were down 15 and 20%. Individual stocks were down up to 30-35%. Complacency had set in, people said it's a buy on dips. Now that particular thesis, in a sense, got challenged with this most recent correction. And the last few days, especially the last 3-4 days, I've seen all-round capitulation coming through. And to my mind, the fear that has set in, and this got exacerbated with Trump coming through, where people felt that the next best thing after sliced bread in investing was actually to invest in the US. So people rushed for the US dollar, people rushed to get out of other markets. Currencies have weakened. The dollar rupee has moved from its comfort zone of say 83.5 or thereabouts, 83 up to almost 87 now. So to my mind, a lot of these theses actually just got taken out. And the last of the naysayers in the US essentially went on this massive short covering spree. Bitcoin went from 60 to 100,000 plus. The Teslas of the world, etc., got short squeezed. Effectively, what you saw was a final capitulation of, in the US, some of the people who felt that US markets needed to fall, they got taken out. US markets made a new high, and now people are awaiting Trump and their pronouncements. And in India, like in the rest of the world, people have moved out, feeling that now it's best time in life ever to invest in the US. And I think a lot of this will revert to the mean. I've been keeping 20th, the swearing-in day, as the top for the US markets for some time to come, and a move back and a reversion to mean in terms of other markets, especially India. And a lot of the thesis now has to be seen in the context of new paradigms, which is inflation coming off, government spending having taken off, the IIP numbers having improved. So I think the fundamental factors for the first time are actually improving, and panic levels, fear, and portfolio, declines and portfolio hurt is actually leading the mind rather than the heart rather than the brain in that sense.
So how much of the poison is out of the system? Because it's not like in intact bull markets, we've not seen these 10% index alone kind of falls previously too.
No. Of course, we've seen this, and we've seen this in 2006, we've seen this in 2005. In the 2003 to 2007, there were at least 3 or 4 cases when markets corrected very, very sharply, as much as 10 to 12%, sometimes even more in the case of mid-caps, almost 20-25% corrections, yet the market continued. So this kind of shakeout periodically is what markets need. Now, obviously, it's painful when you're sitting through it. And if you saw the screen in the last half an hour yesterday, people were selling everything, the baby, the bath water, and everything else that came with that. So essentially, the capitulation which I saw yesterday reminded me of the 2003 to 7 period when multiple corrections of this kind happened. And I'm of the belief that we may be in such an oversold zone that not just a durable rally, but not just a short-term rally, but a durable rally could emerge from these levels.
Markets will make a comeback. What will not make a comeback, and what will make a comeback in an accelerated manner?
I think surprisingly, the beaten down spaces led by financials, where a whole host of PSU and other private banks have hit 52-week lows and gone lower. I think financials could lead the way. They are under-owned, they are hated, and everybody in the street knows that the MFI space pain will continue for the next several quarters. People are unwilling to look at bank and bank balance sheets. The reality is some degrowth or reduction of growth, rather not degrowth, reduction of growth has come in. And my feeling is that no better place to invest in, to my mind, than the financials, which would probably lead the next rally. Other than this, the dollar rupee move, which I think is on a near permanent basis in that sense, will benefit pharma in a big way, where the pharma space does benefit from a dollar rupee, from a depreciation, especially those who are generics driven and exports driven. And two, even the IT space could benefit because part of it, the gains will get passed on to the end consumers, but the IT space could also benefit from the tailwinds here. Other than that, the India manufacturing story, the India PLI story are themes which in the central space along with financials will continue to be the place where money could come in. Apart from which, I think there's been a massive movement out of money from our financials, from a overseas investor perspective. And I think some money will start coming back to the Indian markets, especially where disappointment sets in. And the tech, especially the AI space, has led valuations and money movement in the US market. That's an overall space. And I expect a reversion out of that into some of the emerging markets like India.
With that reversion. Hi, Jayakumar. This is Anisha also joining the conversation. And yes, Happy New Year, Happy Pongal, Happy Makar Sankranti. And there's a bit of a happiness in the street, on the street today because there's a bit of a green. You talked about a lot of themes, right? From, pharma, IT, financials. But what's the take on capital market themes? Because they've had a stellar run in, 2024. But do you anticipate a bit of a reversal this year in terms of the valuations being peaked as well as a bit of a reversal on the entire, SEBI rules and curb on speculative trading?
That's only for brokerages. The SEBI ruling, especially on reduction of volumes. Reduction of volumes is a natural consequence of people losing money in the markets. But I think capital market themes, especially those that don't need large amounts of capital investment. So areas like wealth management, where franchise-based businesses are present, where franchises are important, brands are important, or for instance, the investment banking theme, or for instance, the asset management and the PMS areas. These don't need much capital. They need a brand, they need performance. So I think so I would segregate here spaces like the NBFC, which I'm not very bullish on, and I believe NBFCs, which need large amounts of capital, especially debt, will consolidate more and more their operations or companies themselves into banks, into smaller banks. So the growth for the smaller banks could come through actually agglomerating NBFCs into them. But the capital market themes that I'm talking about are those that need lesser use of capital. In fact, use far more, as I said, of brand and franchise value. And I am bullish on those themes as well.
Great to have you, Jakes, as always, and help us make sense of the madness out there. And hopefully, looking at the capitulation yesterday, we should be coming at least closer to a bottom, if not just yet.